Certainly Anglo was seen very much as being the model to emulate. The mortgage books had doubled, consumer lending had doubled, and lending into the construction, or if you like, the property development sector, had also doubled.
Bill Hobbs was head of business strategy at ACC Bank until 2005. He saw a new breed of loan managers emerge who wanted to go places fast.
At one time, the car park was full of company cars. There were Passats, Mondeos. I'd say less than a year, the car park was full of BMW 3 Series, 5 Series, Marquis Series, soft tops, 4x4s. You knew something had happened. They were very inexperienced in lending, very good at going out and selling.
All banks went the same way, including the two establishment banks. AIB even admitted setting up an Anglo win-back team to steal their customers.
Our loan book is up 30% in the Republic of Ireland. They want to do more business with us. We must be doing something right.
The profits are high, but it's a big business, and it's a huge business.
And maybe we all got carried away in the euphoria. Well, hindsight, of course, is wonderful. We have made mistakes.
Well, it's actually for the dentist. Train tracks are ching-ching, bit of cash, you know what I mean?
No problem.
It very much became a sales culture. A lot of people enjoyed it. There was no tomorrow.
John Barrett was a commercial lending manager in permanent TSB until 2007. He saw how competitive pressure loosened lending criteria.
Almost each passing month, a bank would bring in a new policy saying, look, we lend to a higher loan to value. It'll be easier to get it. It'll be at a lower rate. So you had banks almost cannibalising each other's loan books. It was almost a vicious circle of almost outdoing each other.
As the boom went on, the banks fed people's increasing appetite for property investment. You could release equity from the family home and buy abroad, self-certify your income and get interest-only mortgages. Permanent TSB also brought out the professional investor product.
I suppose the only area that would have been of concern to me was the experienced investor or professional investor product.
If you already owned two properties, you could borrow to buy more, as loan repayments were solely based on rental income.
If you're lending purely on the rent and ignoring the applicant's other borrowings, the difficulty that arises is that if the rent wasn't paid or if the applicant had significant other borrowings, you weren't taking those into the calculation.
Foreign banks hugely increased competition too. When Royal Bank of Scotland took over Ulster Bank, they increased targets for sales and lending. Kieran Finan was a senior manager who felt the pressure.
Well, particularly in the lending area, they felt that trying to grow a lending book by between 20 and 30% would be unachievable. Yet at the same time it was achieved. The pressures being applied were constructed from the top, in that top management were set a particular remuneration package, which if delivered would enhance their personal wealth very substantially.
Did you yourself feel it?
I felt pressure, of course. Everyone felt pressure. And some people could deal with it and some people couldn't.
Bankers say it was impossible to shout stop amid the noise of fast selling and lending.
You're coming up against a team that has a very short-term view, who are bonused to achieve certain results within a year. You can quite easily be sidelined or silenced through sheer pressure, and that regularly happens. That comes as part of the territory when you're a strategy manager, as I was. But I was also seeing this happening to risk managers and compliance people who were trying to raise issues. Individuals who would have had views would have been largely intimidated into silence.
ACC denies such a culture existed at the bank. At the height of the boom, lenders and brokers were entitled to offer loans at staggering levels.
It brought situations where you had 8-9 times salary being made available to individuals. You know, human nature would be, well, I'll go for that amount, rather than sitting back and maybe being a bit prudent.
Please don't let them be up.
On top of this, in the summer of 2005, banks started lending 100% of the property value.
At the end of the day, we have to compete, and you compete across a range of dimensions.
The fact that 100% loans are available is pumping up the demand for houses, it's keeping prices up. It's part of the expansion of credit helping the boom along.
In reality, you might have been borrowed 110, 115% because you were borrowing to cover the other items involved in buying a new property. Equally, it did away with the old traditional value of saving, because, I mean, certainly up to the boom times, people would have had to save money in order to buy a property. They would have had to make sacrifices. That whole psychology of saving was gone.
When 100% mortgages were launched, they were only supposed to apply to elite borrowers. Soon, first-time buyers got them.
1/3 were getting fully 100% mortgage loans. That was clearly taking the 100% concept to extremes.
I suppose if I have a regret, my regret is that, I didn't see this coming, and perhaps the lessons of economics were forgotten.
The Anglo growth, which destabilised the banking sector, also affected Irish Nationwide, a building society which has specialised in home loans with modest growth since the 1980s. It grew to one which amassed huge profits from high-risk commercial lending.
Some building societies are worried about lending too much. Most people want to borrow as much as possible, but a big loan can be a heavy burden in times of small pay increases.
Well, as regards my own society, where money is almost readily available,